Alright, here's a 25K portfolio conservative approach that I'm looking at. The volatility has been extreme lately, and some of the aggressive strategies are underperforming, and I've seen the brunt of that on my end. And here is a more conservative, low volatility approach. Cobra 3, long-term strategy, put in a $600 profit target and put it in a $600 stop loss instead of a $300 stop loss, and remove the profit target. Has shown to capture some big moves. We've also added that in the E-mini NASDAQ. And SR counter trend 2 we've talked about a lot. A consistent set of strategies across markets. And E-mini S&P, NASDAQ, crude oil, and gold. And crude oil, we just have an update for that, and I'm going to show you how you can implement that as well as Cobra 3, NQ, and swing soybeans have had this a very long time. So you do have one swing strategy in the portfolio. Here are the results. It shows an average annual profit of $23,900, but it's skewed to the upside based on 2008, 2009. The recent averages are less. Between 2011 and 2018, you have several years at 14,000 on the low end. 2012, 2014, 2016, 2017, and on the upside you have 27, 26, 24, or 23. So it's interesting, either at 14 or the 25K area. So here is the drawdown curve. You see that it can last about 10 months in this case, and you get a longer period here. So this is something you should consider. If you want to consider doing this, you should look at it for a long-term basis, 2 years. And so here is the results once again. Here are the strategies. How can you implement some of the newer strategies? So what you could do is you could take out Cobra 3, ES, and you could take out SR counter trend 2, crude oil, and add the updates that we just talked about this past week. You could trade the NQ instead of the ES, and you could trade SR counter trend 4, crude oil, instead of SR counter trend 2. You could do that. It's a newer approach. You see the results here, pretty similar. Average annual profit is actually a little less, but the more recent performance is much greater. And so there's a little bit of bias since those are newer approaches. And you see there's a greater standard deviation in 2016, 2017, and the low end versus the high end. So it's less consistent. What you could also do is you could trade those along with the ES and SR counter trend 2. I mentioned the SR counter trend 4 crude oil update that you want to trade strategies that are in a drawdown and a run up, and SR counter trend 2 crude oil is in a drawdown. SR counter trend 4 is in a run up. So what if you trade those together? And so let's take a look at that. If you trade, so now you have 8 strategies. A little bit more aggressive. The more strategies you add, the more aggressive it is. The drawdown's bigger. It's skewed to the upside. You see 51,000 in 2018. You see 61,000 in 2008. You see bigger losses in 2010. Cobra 3 NQ has done well recently. Historically, it's had some bigger drawdowns, but it's suited for this type of market right now. And so you see these bigger drawdowns like this. And so you could go back to the more conservative approach and just and remove this, and you could trade 7 systems with SR counter trend 4 crude, and you get these results. Bigger drawdown, but a little bit more net profit. Average annual profit goes up a little bit, or you could just go back to the original 6 system approach. This number is actually higher on this, 3460. So that is a 25K portfolio. You can sign up on the page on that's on this video. There is a monthly subscription fee, an annual subscription fee at a great discount. And so this is one way to take a look at the markets. It's low frequency. You're not going to take trades every day with this. You might go a week or more without taking any trades. And so it's very low frequency. And if you like to take a lot of trades, you might need to add additional systems at the cost of additional risk.